Hello guys. I am not sure about my voice right now actually. So, hello everyone. Hi, good evening. I think we are gonna wait a little bit because our speakers is still on the way. And also maybe the internet of our speakers is not that stable, so let's wait a little bit. Hi everyone, good evening. And I know it's been a while since we start going live. Well, I can give a little bit like explanation because the first week of the May, it's our national holiday. It's the May Day holiday, so we didn't go live. I know about that. And the week before is because we went to Hong Kong for our HTX events. So yeah, it's just way too busy and we didn't open our live again. I am so sorry guys, but right now we are back. And yeah, I think that's pretty much about the situation of our live channel. And also one second. And also what I'm trying to say is yes, you guys can check out the poster. We changed the style very different than before, and I got a lot of like positive comments. I'm not sure if you guys like it, and it's really great. And also we prepare some USDT airdrops during the live as well. So yeah, I'm still waiting for the guest to join. Yeah, hello everyone. Hello, welcome to our live channel. And as you can see from the poster, today we are going to talk about the microeconomy a little bit. But right now I am still waiting for our guests joining in. So yeah. How are you guys doing recently? Hello everyone, good evening, good morning, or good afternoon. This is Ruth from HTX Live, and yeah, we are doing this live, trying to do this live like every week, talk about the market a little bit. But yeah, sometimes we are still have so much things going on, such as like offline events and also holidays, etc. So yeah, occasionally we will skip one or two, but yeah, we are back online right now. Sadly, I am still waiting for our guests. Give me a moment. Yeah. And also today's topic is about high oil and also higher for longer. How can crypto break out of the liquidity squeeze? So yeah, also it's actually also one of the biggest micro questions facing the market right now. So you know about the oil stays high. Oh, hello, Ash, is that you? You can try to open your microphone. You didn't open your microphone.
Yeah, actually, I opened my microphone now.
Ah,
Checking
yes,
that.
yes. Hi, hi. I can hear you very clearly. Oh, finally.
Yeah,
Thank you for overcoming the difficulties.
yeah, thank you for that. And yeah, let's start actually. I'm sorry for the delay. I couldn't actually get through that.
No, no, no. We're just start live, and yeah, I think the audiences are still trying to say hello to all of us. And right now, HTX Live, we have more than 3,000 audiences with us right now, and also we are multi-streaming on HTX Global YouTube channel. One second. And also,
Well,
yes.
yeah, please go on.
Yes, and also we also multi-stream on HTX Twitter side as well. So, oh, I'm not sure why it's not what's happening, but anyways, yes, and we actually have one more guest joining in, but he didn't read my message at all, so I'm not sure what's going on. Since Ash is here, I'm gonna start everything really quick. First thing first, welcome Ash to our HTX Live channel. And would you mind say hello to our audiences right now?
Well, thank you, 16 for having me here. Hello guys, I'm Ash. I'm actually the operations and community manager at URNA. It is actually a deep in project. Before I start, actually, may I know if I'm loud and clear, audible to all of you? I mean, is it okay on my end?
Yeah. Well, right now I put our poster to the screen so everyone can see the topic and also the guest information. Do you want to turn on camera?
Sorry, actually, there might be some network issues on my end or on your end. Few things are a bit laggy this side. So I just need to make sure that whatever we are talking is actually going through.
I mean, I can hear you very clearly. I think the.
Okay.
Mm-hmm.
Yeah, I think there might be some issues on my side. I'm actually hearing you loud and clear. So yeah, let me continue introducing myself. So I'm Ash. I'm Ash, operations manager of URNA. It is actually a deep in project, and I have been personally working in this Web3 industry since more than 7 years now, since 2018 actually, to be exact. And I have been working across community growth, operations, and ecosystem developments. I've been a part of many major projects previously, and in URNA, we have been building it since 6 months now. We are actually building a physical and digital green energy ecosystem that connects real world energy infrastructure with blockchain based value and through intelligent charging networks and our consensus mechanism of proof of service. We aim to transfer real energy participation into measurable digital value. So that is what we have been building, and we are in our very early stage. And I would like all the uh, attendees here to go check out URNA in our Twitter. You might be able to see that in the Twitter post. So go have a look on that. And thanks over to you. price. Yeah, I'm here actually. Sorry, because of network issue, it is actually breaking. Well, I do think while oil, it does not only affect fuel prices, it also affects transportation, production cost, food prices, supply chains, and eventually consumer inflation. So the Strait of Hormuz is extremely important here because around 20 million barrels per day of oil transit through that um, specific region. So roughly 25% of global seaborne oil trades, according to IEA, is getting transferred through Strait of Hormuz. So any prolonged disruption can quickly become a global inflation shock. We already have been seeing a lot of things happening around the world in different countries. So US inflation data already shows how markets are nervous. Now the US CPI rose 3.8% year over year. Uh, no, actually, I don't have a phone call, but I don't think it's regarding phone call. I believe it's because of my VPN. Because I'm actually using a VPN to connect to the application. Let me yeah, let me continue from where I left actually. As I was saying, actually, 25% of the global seaborne oil trade is getting passed through the Strait of Hormuz. And recently, the inflation data shows why markets are nervous. Like in US CPI, it actually rose from 3.8% year over year in April, while energy prices were up by 17 point. So over the past 12 months, we have been seeing around 18%, 17.9% rise in data. The prices of oil has been going up. And at the same time, the Fed kept the rates at 3.5% to 3.75%. And, like it's still committed to bringing inflation back to 2%. That means that the market's optimism depends heavily on inflation cooling quickly. And right now, the assumption looks really, really fragile. So I don't think we are going to have a solution really soon. So from a crypto's perspective, high oil plus high rate creates a double liquidity squeeze. So higher energy prices will reduce disposable income, and higher rate reduces risk appetite. So, when the dollar becomes strong, it pulls capital away from emerging markets and speculative assets. So yes, markets may be dancing on thin ice, but the key point is this, that crypto can still break out if liquidity rotates into assets that are seen as scarce, like scarce, global, and independent from traditional monetary systems. So Bitcoin is the first beneficiary of, obviously, but broader crypto will need real utility, revenue, and institutional grade infrastructure. So I believe this is actually my opinion. I'm not sure if how things are going to turn out because everything is getting unpredictable recently. So yeah, that's my take on this. So what do you, Ruth?
What about now? My voice. What about now?
I think it's loud and clear. I can hear you.
What about now? Okay, okay. What about now?
I think it's loud and clear. I can hear you.
Okay. So let's move on to the next question. It's about Bitcoin and gold. Bitcoin and gold, have started to diverge if we check the price.
Well,
And
you're muted.
oh yes, yes. What about now? Is everything okay?
Yeah,
Yeah,
it's
it's
okay
okay
now.
now.
Okay. So the question number two is Bitcoin and gold have started to diverge because Bitcoin has rebounded strongly, while gold looks relatively weaker. So which one is the real safe haven assets? Is Bitcoin becoming more like digital gold, or is it still just a high beta risk assets? And how do institution and retail allocation logic differ? What's your opinion of this one?
Well, based on actually this coin market scenario, I don't think the answer is going to be that simple. If it is Bitcoin or gold, they both play different roles in different time frames. So gold is still the traditional safe haven asset, and it has deep central bank demand, decades of institutional trust, and lower volatility compared to Bitcoin. The World Gold Council reported that Q1 2026 gold demanded reached a record value of 193 billion, with central banks buying 244 tons on a net basis. This shows that gold still has a strong institutional relevance. Well, like Bitcoin, however, it is becoming a different type of safe haven asset. It is not even a classic defensive asset, but in short term, it is still reacting strongly to liquidity and leverage and risk sentiment. So I feel that over a longer cycle, Bitcoin is increasingly going to be viewed as a hedge against monetary debasement and currency weakness and financial system uncertainty. The approval of US spot Bitcoin ETPs in 2024 created a regulated bridge for institutions, which changed Bitcoin's market structure significantly. The difference between institutional and retail allocation is also important. Institutions usually allocate based on volatility, custody, compliance, portfolio correlation, and risk budgeting. Retail investors often allocate based on upside, scarcity, and self custody and belief in the long term monetary narrative. So, gold is still the traditional safe haven, while Bitcoin is evolving into a higher growth monetary hedge. So, gold protects capital and Bitcoin reprices capital, while gold is the safe haven for old system. Bitcoin is trying its best to become the safe haven for a digital system. Yeah, that's my take. Over to you, Ruth.
So, personally, I don't think Bitcoin is like it's safe having some way because it's not yet. Go still has like this deeper credibility with the market wants immediate protection, and also but gold as a safe haven reputation remains really strong, even if they can be volatile during periods of forced selling. And but Bitcoin, if we see that on the other hand, because this is a really interesting narrative, we've been talking about this on our Twitter space and also previous live a couple of times, and Bitcoin still trade with like a mix of liquidity positioning and also ETF flows momentum, and also like micro sentiment as well. So, but what clear is uh, like Bitcoin is becoming much more institutional friendly or institutional legible because retail investors may still treat it like a high beta assets, but institutions increasingly view it like a portfolio allocation. As we can see from the news, a lot of big institutions Next question is actually about the latest or the very hot one is about the AI. We talk about like the geopolitical things before we talk about Bitcoin and a narrative thing. Right now we come to the AI section because with the AI bloom, with the AI bomb accelerating, is AI infrastructure draining liquidity away from crypto, or big tech is pouring capital into, like data centers, GPUs, and also AI infrastructure. Will crypto lose liquidity to the AI trade, or could it actually benefit from the broader AI narratives? So how do you think of this one, Ash?
Well, I think in short term, yes, AI is competing for capital attention. Big tech is investing at a massive scale into data centers, chips, clouds, and power infrastructures. And recently, I have been reading a report from Reuters, which reported that Alphabet, Amazon, Meta, and Microsoft are expected to invest around 650 billion to 700 billion into AI-related infrastructure in 2026. So this is actually a huge capital magnet. So, but I don't see AI as a purely negative for crypto. The better way to look at it is this, that AI is pulling liquidity towards infrastructure. So crypto can benefit if it is positioning itself as a part of that infrastructure layer. For example, AI needs compute, data verification, identity payments, ownership, automated agents, and transparent settlements. These are areas where blockchain can become useful, especially through deep in decentralized compute, AI marketplaces, data provinces, and AI plus DeFi applications. The risk is that weak crypto projects with only narratives may lose attention to AI equities and infrastructure plays, but strong crypto projects that connects with AI with real economic activity can benefit from the AI wave. So the question is not whether AI takes liquidity from crypto. The question is whether crypto can become useful enough to participate in the AI liquidity cycle. So AI may drain liquidity from native only crypto, but it can strengthen infrastructure focused crypto as well. So the winners will be the project that connects AI demand with real on-chain utility. Yeah, that's my take on the AI infrastructure draining liquidity.
All right. Thank you, Ash, for the answer. And also, I see from the comments that they missed the video live streaming, but I was supposed to have this like video live streaming with all of you. I know you guys kind of missed me a little bit, but unfortunately today I got a little bit like eye surgery just in the morning, so I look really horrible right now. So I just put the poster here, and also we adjust our poster style very differently than before, and I really like this style, so I just put it here so everyone can see this. And yeah, thank you, Ash, for the answer. Talking about AI is really a, how to say, like a revolution, AI revolution generation right now, and I feel I'm way too old, especially when these AI trains come, and I kind of like envy the children born um, under this AI generation, because when they're born they have everything. They have everything to help them improve their whole productivity from all different ways. And also, I think the question is also really interesting because AI is no longer just a narrative. It's more like a capital sink, because a lot of world's biggest pools of gross capital are being pulled, toward AI infrastructure like data centers, and also like, what is English name, semiconductor, like GPUs.
Semiconductor.
Yes, kind of
Chips. Yeah.
Yes, chips, and also capacities, and also this cloud uh, infrastructure, and also the model deployment. So many infrastructure tools. That means AI is actually competing not just for attention, but for real money, for real like strategic allocation. And me as a user, I believe everyone right now talk to their own AI tools high frequency, and no one can live without it. And also, the news recently noted that investors are increasingly focused on technology developments, especially AI. So even in this mid of geopolitical and macro uncertainty, so yes, AI can drain liquidity away from crypto, like Ash mentioned a little bit, and especially from the speculative parts of crypto, because right now what user needs is real user, is real income, is real narrative. It's not just some like just a narrative without any actual use case. We as time goes by, we come to realize about this. So crypto can also benefit it, with like real intersection with AI, like I mentioned a little bit as well. And sure, also I hope all the audiences, because right now we have more than 6,000 audiences on HTX Live. I really appreciate HTX family support, and you can try to comment the AI tools that you guys are using right now, and you can tell us or share a little bit what do you think it is the most effective AI tools for you guys. Okay, I'm really curious about the answer. So let's try to move on to the next question. It's about how long. It's actually about the dollar cycle. So how long can the strong dollar cycle last? Because the DXY remains elevated and putting pressure on emerging markets and crypto assets, with Trump's tariff policies and rising global trade frictions. When could the dollar finally peak, and what would that mean for crypto? So as we can see, that the dollar prices keep going down and down. So how do you think of this one, Ash?
Well, I believe that a strong dollar cycle can last as long as three conditions remains in its place, like US rates stay relatively high, global risk remains elevated, and a trade friction continues to support inflationary pressure. So the Fed is still cautious on inflation, and that keeps dollar liquidity tight. At the same time, tariffs uncertainty adds another layer of pressure, becoming tariffs can raise because tariffs can raise like import costs and give inflation expectations higher. Trump's 10% global tariff keeps keeping those tariffs in place for certain importers, while like legal processes continues and trade hampering because of the war and everything going on is actually like making things bad in a way. For crypto, the dollar matters a lot. A strong dollar usually tightens global liquidity, so pressure in emerging markets, and sorry, actually, I'm getting a call. Okay, I'm back actually. Yeah, let me continue from where I left. Well, I was speaking about the tariffs by Trump. Regarding the tariffs, tariff war which happened previously, which we saw just a few months back, it actually had a situation where inflation rates were going higher and higher because import cost was increasing. For the crypto, the dollar matters a lot. A strong dollar usually tightens global liquidity as well, and pressure from emerging market and reduces appetite for risky assets. That is why crypto often struggles when DXY is strong and real yields are elevated. So once the dollar peaks, the environment can actually change really quick, and a weaker dollar usually improves global liquidity, which supports stablecoin expansion and improves EM risk appetite and makes alternative assets more attractive. But in short, I would say that we need to be more careful. A falling dollar is bullish for crypto
only if it comes to with improving liquidity and risk appetite. If the dollar falls because of recession fear or financial stress, crypto may initially sell off with other risk assets before recovering. So crypto does not need a weaker dollar forever, but it needs a peak in our dollar strength. Once global liquidity improves, Bitcoin usually reacts first, but then capital rotates into stronger altcoin and infrastructure narratives. So we do not need a very strong dollar. We do not need a very weak dollar, but the management of dollar price, dollar strength should be in a balanced way, which can actually keep the crypto market bit stable. Yeah, that's my take on the whole dollar weakening and strengthening.
Yes, yes. Well, thank you, Ash. Um, yeah, that's true, like you said, and it's very detailed because I think the real turning point for crypto maybe not about dollar falls, dollar goes up. It's maybe when the market start to believe that dollar has peaked because inflation is cooling and because rates can be more stable because global risk conditions are no longer going worse. So that would be much more supportive backdrop for crypto participation, not just Bitcoin itself, but a lot of other like border crypto goes in. And yeah, thank you, Ash. And okay, so let's continue to our last question. So it's actually about the future. It's actually about the institutional side. Like the beginning, I already mentioned the great things is we can see the ETF and flows and also institutions. They're trying to buy Bitcoin as a strategic allocation or as their reserve at some point. But where is the next wave of institutional opportunities? And with Bitcoin ETF flows and more spot ETF approvals, how long can the institutional narrative keep driving the market? And will the next source of fresh capital come from maybe, I don't know, RWA or AI plus DeFi or something else? How do you think of this one?
Well, I strongly believe that the ETF narrative still has a lot of room because ETFs solve one of the biggest institutional barriers, that is access. So, spot Bitcoin ETFs give institutions a regulated and familiar way to gain exposure, and spot Ether ETF approvals also help validate the direction of travel for digital asset products. But ETFs alone cannot carry the whole market forever. So the next institutional wave will likely come from areas where crypto connects with real financial demand. I would highly anticipate three areas. First is RWA tokenization. Second is AI plus DeFi. And third is stable coin based financial infrastructure. RWA, because RWA is probably the most immediate institutional opportunity because it fits the language of traditional finance. And tokenized treasuries, private credit funds, and money markets are easier for institutions to understand that purely speculative tokens are like how RWA.xyz currently shows around 26.7 billion in distributed tokenized real world assets with a value of around 26.7 million in circulation, and tokenized US treasuries alone are around 10 billion in value. So RWA is actually going to have a big future next, and I'm really hyped up about RWA and really excited to see projects building around that. Second, why AI and DeFi? Because AI and DeFi is more experimental but potentially very powerful. If AI agents start interacting with financial markets, they will need programmable payments and automated execution, as well as risk management and transparent settlements. So that is where blockchain can become a neutral backend. And for our perspective in URNA, the next institutional opportunity is not just the bull market narrative, but it is going to be the shift from crypto as an asset class to crypto as a financial infrastructure. So the first wave of Bitcoin access, and the next wave might be, like real world utility and tokenized assets.
with AI-linked financial systems and stablecoins and institutional grade on-chain infrastructure. So yeah, that's my take on the next wave of opportunities for institutions.
All right. Thank you, Ash, for the amazing answers. And yeah, I believe all of us can learn something from this live streaming. And also, I think next wave probably maybe needs a border story than just tell everyone buy Bitcoin, because at least if we stand in the point of institution, they eventually need some new vehicles. They need new yield frameworks, and they need new like sectors that feel it is worth to invest at scales with a lot of money. And that is why people keep talking about RWA, AI plus DeFi, and also infrastructure, and also something like regulation or regulated on-chain financial products as well. So I think the next durable institution theme, probably, I don't know, probably from where crypto stops looking purely speculative. I'm not sure if I can say that, but that's just my personal opinion. Just where crypto stops looking purely speculative and starts looking more operational or more real use case where it solves a real financial problem or infrastructure problem or any problem that we are facing financially right now. So yeah, and once again, thank you, Ash, for joining us. That's basically cover everything we are gonna talk about for tonight's live stream. And also, you know, we talk about high oil and higher for longer rates. We talk about Bitcoin versus gold, and we talk about AI. We talk about dollar cycle. We talk about the next institutional narrative. So to me, I think if I made this conclusion, I think, give me a few seconds. I think crypto is no longer trading in the world of a isolated narratives, because it's now being like shaped by, we can tell, like energy prices, rate expectations, and also US dollar liquidities, and also institutional flows, and also competition from other major groups like AI, right? And it definitely squeezed a lot of room for crypto as well. So that is exactly why the market feels more mature, more stable than before, but it's also more difficult. Well, yeah, I think that's it for today's live. Once again, thank you, Ash, and thank you all of our audiences tuning in. And yeah, we wrap up with more than 8,000 audiences with us. And also, if you enjoyed tonight's discussion, make sure to follow us and stay tuned for the next weeks, and where we will be keeping, breaking down the more big macro or crypto themes in a way that helps everyone to build a clear market framework, so everyone can have this safe trade and can make more money. All right. So I think that's it for today's live stream. Yeah, thank you, Ash. Is there anything you want to say to our audiences before you leave?
Well, I don't have anything specific, but like I represent URNA here, and URNA is actually a layer one blockchain. We are a decentralized physical infrastructure, which is also building around RWA, and it's actually something which we are developing around green energy. So I would like to request everyone to have a look whenever you have some free time to go check out our project URNA. It's in its very initial stage. We are also going to come up with a very good incentive plan for the users and the early joiners of our ecosystem. So go check it out and have your opinion share on our comment section. And thank you for listening to me.
Okay, thank you, Ash. I think that's it for today's live. So bye, everyone. Bye bye.